is also doing pretty well. Varun Goel, Senior Fund Manager of Equity at Mirae Asset Investment Managers, is with us on the show. Varun, hi, afternoon, and thanks so much for joining in. What have you made of all this recent news flow, news flow surrounding Adani, the possibility of tariffs on day one of Trump taking power, taking charge, the stocks rebounding and now today collapsing? Give us your thoughts on the markets and what we've seen over the last 1 week.
Good afternoon, Rima. Thank you so much for having me on the show. I think as far as the change in government in US is concerned, I think there is a lot of expectations on both positive and negative sides. As far as I think India is concerned, specifically for the IT sector, we do not expect a challenge in terms of visa and for Indian workers. I think most Indian companies today have a presence in US onshore, and therefore I don't think there will be a large impact on that. Selectively, there might be some sectors or companies which might be impacted by some tariffs. But we do not expect overall a big negative impact on Indian economy or markets in general. I think broadly, we are still 2 months away from the inauguration of the new administration and exact policies. And I think one would come to know only once they take office. But broadly, I think the period 2016 to 2020 was pretty good as far as India was concerned, both from an economic and a geopolitical perspective. So this time also, we are quite hopeful that there will be no material negative impact on India. I think recent correction in the market is more as a result of the slowdown in earnings that we saw in Q2, and we are quite hopeful that come January, when the Q3 earnings come, we will start seeing uptick in corporate earnings, and that should we should see a revival in growth. The cyclical slowdown that we have seen for the last few months, hopefully, we should see the reversal of that, and growth should come back very strongly going forward.
All right, hi Varun. Good afternoon and good to see you in. Nigel on this side. I recall we spoke last, right? You were quite positive on tech. Wow, what a big rally we have seen. I think from early October till now, that index is roughly around 8 to 10%. So that's done quite well. What's your view right now? One school of thought says that Trump is good for tech, his spending is going to go up, particularly on services, which bodes well. But valuations are not very cheap. Would you stick to these names? Because now, if I look at the Nifty IT earnings growth, it could outperform what the Nifty earnings will be. Your take.
Good afternoon, Nigel. I think broadly, as far as IT sector is concerned, we would expect a healthy double-digit earnings growth as we get into FY26. I think this year, while we have already seen revenue reviving, we have seen some large orders also coming in. We expect the margins to start improving from the January quarter. So I think broadly, earnings seem to be on a revival track. FY26 should be a year where we should see the large cap companies delivering a low double digit, and a middle and small cap companies can potentially do higher double-digit earnings growth. So we remain constructive on the sector. Having said that, the valuations have definitely moved up in the last few months, and therefore, one needs to take that into account. So we are pretty comfortable with the current slight overweight stance on IT, and I think we will maintain that going forward.
Varun, hi, afternoon. What about insurance? Where do you stand on this? Because there's a big worry in the market now that something is coming on this bank assurance channel.
Yeah, good afternoon, Subhi. So I think there's a lot of speculation as of now. We would hope that, if there is any change, the regulator will come and, we will have some discussion amongst the industry participants. So one would wait for the dust to, really settle in terms of what are the policy measures. In fact, I would just like to point out that there is also expectation that there might be tinkering with the GST rates in the next calendar year. So that might also be a positive thing for the insurance space as a whole. So let's wait. There seems to be a lot of things which might be happening on the IT space. And I think the budget in the first week of February might give us more clarity on some of those matters.
Have you made any purchases in the last 2 weeks, Varun?
Rima, I think our portfolio has been largely stable. We, of course, as we have seen some correction in some of the industrial / capex names, we have been adding a little bit to that side. I think we have added a little bit to our exposure to the banking space. But other than that, the portfolio largely remains stable.
In banks, it would be the large private sector financials? Or are you including capital market players, etc., NBFCs?
Yeah, so I think banks is coming out of a period of earnings slowdown. I think last 4 quarters have been soft because of margin pressures. I think we are largely coming to the end of these pressures. Also, finally, the deposit growth and the credit growth are now converging. Incrementally, as the RBI cut rates from, let's say, the first quarter of next calendar year, we would expect banks to have a healthy margin profile, and we expect the credit growth to remain at 12 to 13%. The credit costs remain largely contained. So we believe that the earnings growth in the Tier 1 banking names, both public and private, should come back very strongly in the next financial year. In fact, for the Nifty as a whole, we believe banks would be the biggest contributor to a strong earnings growth revival for next year. So we remain quite constructive. We have been adding to our exposure in large private and public banks. Also, we remain, I think, the financial savings as a theme, be it asset management companies, wealth management companies, exchanges, and various utility providers. We remain quite constructive. I think that's a decadal theme, and we continue to increase our exposure whenever there is an opportunity.
Varun, you have been constructive even the power space. Could you tell us which part of it are you playing at? This week we've got a lot of news flow, on the power sector. What do you like? You had NTPC Green as well that listed. Not too much interest. I think the IPO price was 108. Currently, the stock is 131 rupees in 2 sessions. What part of the power space are you all playing?
So I think there is clearly, with the way things are, there is clearly scarcity of power capacity. I think the power demand growth is going to surprise everybody in the next few years. We are going to see, of course, the shift from the fossil fuels to the greener energy. So we expect that part of the space to do well. But at the same time, we would believe that as more energy guzzling sectors like data centers become more prominent in the economy, the demand will continue to be robust. So we expect both thermal ecosystem players and the renewable power players to continue to do well for the next 3 to 5 years. Also, I think transmission is a space where probably we have the largest shortage, and that is one space where we will see massive capex in the next 3 to 5 years. So those companies which are involved in the power transmission space should also see very, very strong growth in the next few years.
Okay. By the way, the fall is now almost 400 points on the Nifty. Don't lose sight of the market as well. The 3 p.m. move, for whatever it's worth, is it going to help us take the market higher? I don't think so. This is a move that's more on the way down right now. 23,873 is the lowest level of the day, and we are practically there. So it's crunching pressure coming in on all sides of the large cap market. Varun, just a word on financials. How are you placed on NBFCs? There's a lot of talk about stress in the MFI sector in specific. I don't know if you had any exposure to some of these lenders and whether you think this is a passing phase. What's your sense here beyond the large banking names? How are you playing the NBFC space, and a word on MFI as well?
I think MFI, clearly there has been some distress in the space for some time, and I think it will take another 2 quarters for the dust to settle there. In the meantime, there will definitely be increase in delinquencies. There might be pressures in terms of higher credit costs, and hopefully by the first half of next financial year, we should see things stabilizing. So that is a space where we are not incrementally looking to add in the short to medium term, but from a slightly medium to long term perspective, I think the space delivers healthy return on equity and good growth. So I think we will get to a point where the space becomes more attractive. As of now, we are picking up more in the large banking space as compared to some of the MFI players.
Thank you, Varun, for joining in. In fact, let's take this.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.